Good afternoon, everybody. Welcome to the day 14. Today is 9th April, and today no, today was the 14th day of our 60-day trading challenge, and today was an event day as well. We had a RBI policy announcement day. Generally, any such planned or unplanned event days, market moves in a volatile manner, and we generally avoid taking the trade, but as part of the 60-day trading challenge, we didn't want it to avoid taking the trade because just to maintain the continuity. So hence we took the trade. Of course, it's not that I'm giving an excuse or anything, but that is a fact that is the rule of the game what we follow. And of course, today we ended the trade in a loss. That is time-based trailing stop loss got triggered. So I'll just deeply, not much of a learning as such, but however, I'll try to walk you through the trade logic and details. So as I said, since it was an event day, we did not take the trade till the policy got announced at the meeting. Announcement starts at 10 o'clock, and then around 10:20 or 10:30, the whole there was a clarity, and then we were waiting for our setup to form post that, and the setup got formed at 10:45. With a bias of market might go down was our directional view. But as you see in the chart, this is a Nifty chart. This is where we entered, and then this is a 5 minutes Nifty chart. So it for a momentarily it went up and then it came down, but and after that it's again went up, and then most part of the day it was in a sideways within a range. And I have marked the day high here just to mention that although this scenario is not at Apple, post entering our trade, if the previous high, whatever for the day, if it breaches also, we actually take a exit from the trade. That means there are three rules for the exit which we follow. Number one is the 50% stop loss as it is. Second is the, as I have explained in multiple videos, the time based after 1:30, the day low we try to capture, and we will move the stop loss to day low multiplied by the 50%. That is 50% from the day low will be the stop loss. That is a trailing stop loss, which we call it as. The third type of exit could happen, but which has not happened so far, is if since we have taken an entry on the with a view that market will fall, if it starts going up, and if the day high it crosses the prior to the trade we take, prior to that whatever is the day high, if that breaches, then we generally exit the trade. But as of this day, that is till the 14th, in the past 14 days, that scenario has not happened, but it may happen in the future. But so I'm just giving a heads up on that. And then uh, the premium chart, whatever we have sold as you see, is 22,900 CE of the next week, because today is the expiry day. Since tomorrow market is closed, the Thursday market is closed. So today was the expiry day, weekly expiry day. So we generally, as explained in the yesterday's video also, normally on a 1 day prior to the expiry and on the expiry day, we generally tend to take the next week's expiry instruments, and accordingly next week expiry instrument we took the trade. The trade got triggered at 10:45, and then this is the candle on which we entered. Post we and taking the trade, it went down, no doubt, and then it started recovering, and then we had an initial stop loss of 131. It is far away, and then this was the candle like till 130. It's in these stop loss did not get triggered. So then we took this as the base, and then this is the low, as you see in the above, like 70.55 is the low. So on 75.5 multiplied by 1.5, that is 105.85 is our trailing stop loss. And almost towards the end of the day, that is at even we would have almost exited at the more or less similar level, but we did not need to exit because our trailing stop loss got hit on this candle, which is a 310 candle, that is almost 315 candle. It got triggered and we stopped out, trailing stopped out. And as I see here, it got triggered at 311. Otherwise, also in next 3-4 minutes, we would have exited the trade manually. So, but it is a trailing stop loss which stopped us out. So then coming back to the our trading journal, as you see, this is the 22,900 CE, and then 87.55 was our entry price, and exit price was 105.95. This is a trailing stop loss, time-based trailing stop loss. It got it, and we paid about 60 rupees, 60.30 as our trading cost. So we incurred a loss of 1440 for the day. And the learning point of view is generally it isn't event days, it is best is to avoid the trade unless we have a very clear view of the trend. But we were not very too clear, although we thought our view was market down based on the setup, whatever our strategy indicated. But the normally it was not a trending day as such, and it was not giving any indication of trending day as well. So having said that, that is the learning which has been captured here, which can, one can go through since this access is available for the journal for everyone. So for a learning purpose, one can surely go through. So at the end of the 14 trading days completed now, so we are at the 4.7% still on a positive side, which is which is a good thing. Again, my focus is repeatedly keep saying that not the P&L, but sticking to the rules. We were able to stick to the rules in toto today. So that is a good learning for the day. And tomorrow is a market holiday. So for the 15th day trading, we will please do join on Friday. So thanks for your time, and have a good day and good evening. Bye bye. Take care.